The Tom Woods Show, episode 482.
Prepare to set fire to the index card of allowable opinion. Your daily dose of liberty education starts here. The Tom Woods Show.
Hey everybody, Code School can teach you a highly marketable skill, web technologies, in your spare time, cheaply, and you'll feel like you're playing a game instead of sitting in a classroom. Get your free account through tomwoods.com/code. Hey everybody, Tom Woods here. Always a thrill to have a chance to talk to Peter Schiff about what's going on in the economy, what we can expect, what we ought to do, and to get some audience questions answered. I actually asked the people over in the private Facebook group, I've got Peter Schiff coming on, what would you like me to ask him? And I got some good questions, so I'm going to try to get to as many of those as I possibly can. Of course, you can join that private Facebook group and be part of what I call the elite by heading over to supportinglisteners.com and joining me there. And once you sign into your account, you see how to get to the Facebook group and everything, all the benefits that you get. You got to sign into your account and you'll get them. They'll be showering down upon you once you're inside. By the way, I used to be a fill-in host for the Peter Schiff Show back when Peter had a 2-hour-a-day radio program, and I can't tell you how many of my own listeners today say they heard me for the first time on the Peter Schiff Show. It wasn't because of my articles or books or YouTubes or speeches or anything like that. It was because I hosted the Peter Schiff Show from time to time, and then when I started this show, and Peter really helped give me he sort of kick-started this show into existence, they followed me over here to this show. So I'm always grateful to Peter for that. Peter Schiff is CEO and Chief Global Strategist of Euro-Pacific Capital, which you can visit at europac.com. He's the author of numerous books, including Crash Proof, How to Profit from the Coming Economic Collapse. And then he later wrote Crash Proof 2.0, How to Profit from the Economic Collapse. He wrote The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. And he also wrote a book, an illustrated book, actually, although you can read it and not feel like it's a children's book. It's not, but it can be understood by younger people, called How an Economy Grows and Why It Crashes. My 12-year-old is actually reading that book now, and she is being inoculated against nonsense. So it's great. So if you're wondering what's a good book for somebody in that age range, like between 12 and 17, but also a book that you could read and profit from yourself, I strongly recommend How an Economy Grows and Why It Crashes. We'll link to all this stuff on today's show notes page, tomwoods.com/482. Peter Schiff, welcome back.
Well, Tom, thanks for having me back on.
I've got a whole bunch of listener-supplied questions I want to ask you, but I've got a few things that are just obvious, and you've probably had to answer them a million times, but people are going to demand to know them. First of all, how do you assess the situation in China as of today? We're talking the beginning of September 2015.
Well, first of all, I think that we're trying to scapegoat a lot of our problems on China. You know, I was looking for headlines. I wanted to post an article about the stock market decline on my Facebook page, and it took me forever to find a story that didn't blame the decline on China in the headline. And, so people want to, come up with a palatable reason why the U.S. markets are going down. And so blaming it on a country like China, that we don't have to think about what might be going on domestically that might be behind that decline. But, I think China is going through a bit of a transformation. I have been forecasting this for many, many years. I wrote about it in my original book, Crash Proof, that China has been exporting much of their production to America and lending us the money to pay for it. And I think right now their economy is transitioning to rely more on domestic consumption and services, which I think is going to lead to an improvement in the standard of living of the Chinese. Not that they're going to stop producing. They're going to continue to produce. They're just going to consume what they produce domestically, as opposed to making their production available to Americans on credit. So I think this is the beginning of that big transformation. I think also you see the Chinese trying to let their currency trade a little more freely, as they're also beginning to unload some of their huge holdings of U.S. treasuries. And this could just be the beginning of a major exit from the U.S. Treasury market, not from China, just from China rather, but from emerging markets in general, from the Middle East. A lot of the petrodollars could be coming out. And this is really going to come back to bite America because we rely on the fact that the world will accept our dollars in exchange for all the products that are produced and all the resources that are produced outside the United States. It's a great deal for us. We print a lot of money and we export it. And we get real things that require real resources and energy to produce, and we've been getting the better deal, better end of that trade. And I think this could be turning, which is going to be a very, very disruptive force for our phony bubble economy here in America.
And Peter, I realize this is not quite the same thing, but when you hear somebody like Donald Trump saying that what the United States really needs is a tough leader who can go in there into negotiations with the Chinese and get the U.S. a deal that's favorable to American workers, how do you respond to that?
Look, it shows that there's just not a bunch of fools in the Democratic Party, right? We've got our share of fools in the Republican Party as well that buy into that. Look, there's a lot about Trump that is appealing. Except a lot of the stuff that he says, but what he's doing is he's trying to appeal to maybe the ignorance and the frustration within the Republican Party, which I share because, basically our leaders have betrayed the real Republican principles and have just gone along with growing the welfare state and the warfare state, and government keeps getting bigger and spending more, and our liberties keep getting fewer and fewer. So there is a lot of frustration in the Republican Party because they can't get any results, even if we manage to elect Republicans. We keep marching down this road to socialism or serfdom. But now you have a guy like Donald Trump promising to be something different, but his solutions are very simplistic, talking about, I'm just going to get tough with China. Like the only problem we have is we don't have the right negotiators. If we just change the players, if we had smarter bureaucrats, that somehow they would engineer the economy better than the dumb bureaucrats that are there now. And, that's not going to work either. I don't care how much business acumen Donald Trump has or how much money he's been able to make in the hotel industry or in the entertainment industry or the real estate industry. He just can't, negotiate our way out of these problems. We don't have trade deficits because we have bad negotiators. It's because we have too many regulations. Our taxes are too high because of our monetary policy. And none of that is going to be changed by just putting Carl Icahn as the ambassador to Japan or something.
All right, I want to turn domestic now. I've got a bunch of questions that people submitted. I have a private Facebook group for people who support the show, and I said, Peter Schiff's coming on. What do you want me to ask him? And these are all people who love you, but they want to ask you devil's advocate questions to give you a chance to defend yourself because, you have some critics out there, as we all do. And one of the criticisms you've had to deal with over the years is that somebody will say, look, I'll admit to you that Schiff got the housing bubble right, and he nailed that one, and he was laughed at, and he turned out to be totally vindicated. But the problem with people like Schiff is since they're always bearish, they're bound to be right once in a while. How do you respond to that?
Well, first of all, if you go back and you look at and read the things that I was saying back from 2004 mainly to 2008, when it hit the fan, I didn't just say, housing was overpriced and it was going to go down, right? I went into every specific detail about what the problem was and how it was going to be resolved. So it wasn't like I was just, repeating like a broken clock, negative things. I got it. I got all the intricate details right. In fact, I still think if you look or read the things that I wrote about the housing market in 2004, 2005, that my explanation of the problem and what was going to happen is still better than most of the explanations that were written in 2010 or 2011 after the fact. People even say, "Hey, how did you have a time machine? How were you so accurate?" And so you can't really say, "Hey, I just got that lucky," because I really nailed that thing completely as far as how it went down. But also, what people don't understand is a lot of the other forecasts that I've made that have yet to come true, right? That people are going to say, oh, see, he's got all this other stuff wrong. This stuff is just as wrong as my predictions about the housing bubble were right up until I was proven right. because for years people were laughing at my forecast on the housing bubble the same way they're laughing at my forecast now. But it's all part of the same problem. The housing bubble was a manifestation of Fed policy being too loose. And that policy continues. In fact, monetary policy is easier now. It's looser now. The mistakes that are being made under Yellen and were made under Bernanke are much bigger than the mistakes that were made under Greenspan. In fact, Yellen and Bernanke make Greenspan look like Volcker. So it's all the same problem. And the people who didn't recognize it prior to 2008 still don't recognize it, but it's still ongoing. And if you go back and look at all my predictions about QE and how it wouldn't work, I think that I've been vindicated. It hasn't worked. That's why the Fed has interest rates at zero still. That's why we had to do QE 3 times. It's because it didn't work the first 2 times. And the reason I'm still convinced we're going to do QE 4 because QE 3 didn't work. I think all the people that were talking about how effective the Fed's response was going to be, they're the ones that are wrong. Yet they're still trying to pretend that they were right just because the dollar hasn't collapsed or just because we haven't had a big spike up in CPI inflation. All that is coming, right? That's the end of this. That's like, you're standing on a train track and I'm telling you, hey, there's a train coming, get off the way, get off the track. And you're just saying, well, nothing's hitting. There's nothing here. But if you wait until the train hits you and then you're dead, well, it's too late to do anything about it. I'm trying to get you off the tracks now because I know that train is coming. I'm not going to wait for it to hit you to try to claim, oh, you see, Schiff was right. I guess there was a train there after all.
Well, here's a follow-up that in light of the various rounds of QE and the negative predictions that people like you have had about where all these rounds of QE are going to take us, another criticism would be that because of the certainly correct analysis that you have about the problems with QE, this leads people like you, they would say, to miss the great big stock market booms. These big bull markets pass us by because we're so looking forward to the far future that we don't see the short and the medium term gains that we can earn.
Yeah, and people were criticizing me for that the last time around when I was talking about the housing bubble and the bubble in the U.S. stock market. People were saying, well, but you're missing out on all the gains. And the reality was actually from 2001 to 2008, we had much bigger gains, right? My strategy of investing internationally and investing in commodities served me extremely well during the inflation period of the housing bubble. So I was making a lot more money long foreign stocks and commodities than my critics were who were long the U.S. stock market. Now, that has not been the case for the last few years. You can certainly criticize me validly for being on the wrong side of the markets for the past few years because I have been long foreign stocks rather than U.S. stocks. And given the strength of the dollar, that has undermined my strategy. So this time around, we've had a dollar bubble that I think is kind of similar to the bubble we had in the late 1990s, where, when I was worried about the stock market bubble, I missed out on the gains in the dot-coms and the tech stocks because I was thinking that it was a bubble. It was smaller than the one we have now. And so I missed out on that 4-year rally too. I remember my clients from 1996 to 2000, we had serious losses during those 4 years as, my bullish colleagues, were racking up huge paper profits in the dot-coms. But when that bubble burst 2000, 2001, and the dollar bubble burst with it, my strategy turned around, and the profits that I made from 2001 to 2008 dwarfed the losses that we had temporarily from 96 to 2000. So people following my advice from 1996 to 2008 did much better than people who followed the advice of the mainstream to just buy U.S. stocks. And I think the same thing is going to happen again. I think the losses that people who are following my advice are suffering now because of the dollar bubble, I think we're going to be vindicated again when this dollar bubble bursts, which I think is much bigger than the one that we had in the 1990s. And so I think over the longer term, my approach of avoiding the U.S. dollar and U.S. markets and investing in sounder economies and sounder currencies abroad, even though it's off to a slow start these last few years, because of the false optimism surrounding the U.S. economy and the Fed, which is just what they did in the late 1990s with the new era and the fact that people thought we were going to pay off the national debt with the surpluses as far as the eye can see. All that nonsense, which I knew was nonsense, the majority embraced it, and it was a false narrative. And now the false narrative is that, hey, the Fed's monetary policy has worked. They solved our economic problems. We have a sustainable recovery. We no longer need the support of the Fed. We're going to normalize interest rates. The Fed's going to shrink its balance sheet. Everything is great. Meanwhile, the rest of the world is a mess. That narrative is totally wrong. And that's what's behind the dollar ride. So I think when this bubble bursts, when people realize that it's not the end of QE, it's just the beginning. We've got QE4, we've got QE5, who knows how many we've got, that the Fed is going to keep interest rates at zero forever, even if they temporarily lift them to 25 basis points. The next move is to bring them back to zero. And this whole false narrative is going to fall apart. And I think I'm going to be vindicated once again on the long-term success of our investment strategy, even though I am not a trader. And some people say, hey, Peter, why don't you try to trade the irrationality and the emotions? Why don't you anticipate all the stupid things that investors are going to do based on their misunderstanding of the facts and then try to profit from that? And, there's an argument to be made that maybe I could do that successfully, but who knows? I mean, it's very difficult to do that. I think in order to buy into a bubble, you really have to be fooled and think it's real, because it's very difficult to knowingly do something that you know is stupid, but just hope that you'll be able to get out before the trend turns. Usually the people that participate in the bubble are the ones who don't know it's a bubble, but then of course they never get out and they go down with the ship. A lot of times people who try to short into a bubble, they end up going broke. They see it early, they get short. That's where that expression comes from. The market can remain irrational longer than you can remain solvent. So that's why my approach to bubbles has not been to just bet against them on leverage, but just to buy the assets that nobody else is buying when everybody is distracted by the bubble, and take advantage of the opportunities that other people's foolishness present. And then you have to be patient and wait to be paid, because in the long run, if you're buying the value, if you're buying what nobody else wants because they're distracted by a mania, you eventually will make money. The problem is it's difficult because in the short run, all the fools who are getting rich laugh at you and make fun of you. But if you can ride it out, those fools will end up losing all their money and we'll get the last laugh.
All right, let's pursue this a bit further, because I have a question from someone saying, I see no shortage of Austrian economists predicting another economic calamity, but I struggle to find one who's willing to give basic and sound advice on how to protect against it. If there are bubbles everywhere, how would you balance your portfolio to protect against an event bigger than 2008? I don't think you'll get a clear answer. Well, you show him, Peter. Give him the clear answer.
Well, sure. I mean, there are problems everywhere, but a lot of people don't realize that America is the source of those problems because we export our bad monetary policy all around the world. That's one of the things that we actually do export. And we're still the primary reserve currency. And so what we do with our monetary policy and our interest rates affects other economies. And if we're keeping our rates too low, so are other countries. And, our bubbles are inflating bubbles all over the place. So yes, there are problems every place, but there are real safe havens. I mean, right now, people are seeking out the U.S. as the perceived safe haven of choice. They say, yes, we're the cleanest dirty shirt in the hamper. So as bad as things are here, they're worse every place else. No, they're not. I mean, there are probably some places, you could take a look at Greece. Is in Greece worse shape than the United States? Yeah, maybe. But there's not that many countries that you can find, that are actually worse than the United States. I mean, maybe, don't look at like sub-Saharan Africa, but, regular major economies, I think we're more screwed up than Japan. I think we're more screwed up than Europe in general. I mean, I think we're worse off than Italy. We're worse off than France. I mean, they've got problems too. It's not like I'm investing in Italy, but there are countries that really are safe havens. You can look at countries like Switzerland or Singapore or New Zealand, just to name a few, where, look, there are problems there, but on a scale, relative to the United States, they're very, very low. I mean, they have more economic freedom. They, in general, have lower taxes, fewer regulations, a better balance of trade, higher domestic savings rates. I mean, they're doing things right. And so if you're really looking for safe havens, they're out there. And there's good companies we're buying for our clients. good quality stocks that pay dividends in currencies that I expect to be much more valuable relative to the dollar in the future. Now, all of my stocks have been going down the last few years, mainly because of the dollar. I mean, most of my stocks have not gone down in their local currency, except those related to oil or gold, but they have gone down in dollars just the way they did from 1996 to 2000. But that was a great opportunity. That was a great time to invest with me. But of course, not as many people did because I'd never been on television. I didn't have any books out there. It's ironic and it's probably typical that when people were really sending me their money, when I was getting the most inflows, that was probably the worst time over the last, since the early 1990s to have invested with me. When people were sending me money in 2010, 2011, I had a huge run. We had a spectacular run from 2001 to 2008. Then 2008 was a big down year, but 2009 got it all back. And then 2010 added to it, 2011. So all of a sudden I get all this money, it's all coming in, but that's when the dollar really peaked. That's when the dollar bottomed out and foreign currencies peaked. That's when gold peaked. That's when oil peaked. And so that's when I was getting a lot of money. But ironically, now is the time to really be investing with me, just like it was, in 1996, 1997, or actually not 96, 97, but 1999, 2000, 2001, when the markets had gone against my strategy for several years. That's what's happened now for the first time since then. This is the first time where I've had several years in a row of underperformance, where the foreign markets have underperformed the U.S., where the dollar has been in this bull market. So this is when people really should be pouring money into my strategy, whether they do it with me at Euro Pacific Capital or whether they just do it on their own. But this is when people should be looking at these emerging markets, looking at commodities, looking at these alternative safe havens. And of course, gold, I was buying gold for clients and gold stocks for clients. And of course, by 2001, that's when gold prices really took off. And we were buying gold for people when it was under $300 an ounce. I still have some silver that I bought, for under $5. I remember buying silver in the fours. It was there for a while, but then it got up to $50. And, people got very bullish, but now it's been falling for several years. Now it's 14 and change, and, people aren't nearly as bullish. But I still think we're going to take out those highs in silver. I think we're going to take out 1900 in gold. But you've got all the people that were bearish on gold. I was going on television in 04, 05, 06, bullish on gold. Everyone was bearish, making fun of me, right? As gold prices kept going higher and higher and higher, gold was beating the U.S. stock market. But now all the people that were bearish all the way up are now saying, you see, I told you so. Schiff's a broken clock. Look, gold is down 1,140. He's been wrong. He's been wrong for 3 years. Yeah, but they were wrong for 10 years. They were saying this. They kept saying it's going to go down. It's going to go down. Suddenly, they're so smart. They're the ones that are the stop clocks. I just understand the dynamics behind gold's move, and because I understand the dynamics, I know that gold's not finished moving. I know that it's going a lot higher. But a lot of the speculators, maybe who finally, big Wall Street money that finally jumped into the gold market at 1,800, right? They're now short. A month ago, we found out that hedge funds, for the first time ever, are now short gold, right? These are the same guys that were piling into it at $1,800, $1,900. They were all buying it. Now they're selling it because they don't understand. They didn't understand why they were buying it. Now they don't know why they're selling it. They're just following the momentum.
All right, I got two quickies before I let you go because I know you're a busy guy. But the first one is your company Schiff Gold just put out a free white paper on the fiasco of the student debt problem, and I'm linking to that at tomwoods.com/student so people can read it. Give me your executive summary of what's going on there and what the problem is.
I wrote a lot about student loan problem in my book, The Real Crash, and the revised edition of The Real Crash. But it's a perfect example of the government creating a problem and then presenting itself as the solution to the problem it created and then making the problem worse. See, college used to be very affordable, right? It wasn't very expensive. Anybody could go. Of course, not everybody did because not everybody needed to go to college, right? Maybe 1 out of 10 people did. But people that did go, my dad went. He went to University of Connecticut. He majored in accounting, and he ended up starting an insurance agency. So, he probably benefited somewhat from his education. But his parents didn't have much money. They were maybe lower middle class in Connecticut. So my dad did what all of his friends did. He got a summer job and worked his way through school. And that was very common. And, he graduated. There was no debt, right? And it wasn't that expensive. I mean, he didn't have to borrow any money, and he didn't need any money from his parents. He just waited tables over the summer, and that was enough to pay his way through. And but the government all of a sudden sees a bunch of college students, and they want their votes. So how do they get their votes? Hey, we'll make it easier for you so you don't have to go out and get a job to go to college, right? You don't have to do that. We'll loan you some money. And we'll guarantee your loan so that you can borrow money at a really, really low rate of interest, because we'll guarantee the loan. So it'll be like a U.S. Treasury. So any bank will be willing to loan you money because, the U.S. government's going to guarantee it. And so then you don't have to work. You can just spend all your time on your studies and just pay off the loan after you graduate, because, you're going to make so much more money as a college grad. This loan is going to be no big deal. So that's what started it. But of course, now the college students, they got all this government money and they start bidding up tuition. And of course, now more people are willing to go to college because, they can borrow money from the government. So all of a sudden, the colleges have a big influx of customers that want their services. So they start jacking up the prices. And now the prices are getting higher. And so now the voters could complain about the rising cost of college. So the government solution is, well, we'll make more money available, more loans, more scholarships. And then the universities are great. We can raise our prices even faster now because our customers have even more government money to pay the tuitions. And then, of course, those kids, they're 17, 18, they don't really know anything. Then the colleges start saying, hey, come to us. We got a brand new gymnasium. Hey, we got these beautiful dorms. We just put in tennis courts. We've got all this stuff. And of course, the colleges are borrowing all this money to buy all this stuff. And it's all being paid for, and it's this huge, gigantic bubble. Now you got, 1.3 trillion or something in student loans. You got students graduating, waiting on tables, driving taxi cabs with $50,000, $100,000 worth of debt. They majored in nothing. They studied liberal arts. They wasted their time. They wasted money. There's no hope of ever paying it back. It's a typical example of how the government destroys everything it gets into. Government wanted to make college more affordable. They made it more expensive. And at the same time, they destroyed the value of the degree. It costs more to get a degree, and the degree is worth less because everybody now has one. So if you actually want to differentiate yourself, you got to get a master's degree. You got to get a PhD. A college degree means nothing. I mean, I think a college degree today has less marketable value than a high school diploma did before the government started subsidizing college. And so this whole bubble is going to burst. Meanwhile, you got all these kids, they can't afford to buy houses because they have student loans. They can't afford to buy cars. They can't even rent. They're living with their parents in basements. Many people won't even get jobs because if they get a job, they have to start repaying their student loans. I was interviewing housekeepers, and a woman applied for the job, but when she found out that I was going to pay her on the books instead of cash under the table, she said, I can't take the job because I don't have to start paying back my student loans. I don't want to do that. So she was only willing to work under the table because she didn't want the government to know she had income, because she didn't want to have to start paying on her student loans. And there's so much fraud in this student loan thing because the default rates are much greater than what the government claims, because so many student loans are in deferment where, if you don't have a job, you can get a deferral. That doesn't count as being in default. And now they have these new income-based repayment plans where if your income is low enough, your actual required payment is zero. So there are lots of people who are making payments of $0, and those loans are not considered in default, even though the government's not getting any money. Oh, yeah, there's so many of them. And all of these, now, what happened is Obama made it worse because Obama basically cut out the middleman by saying, hey, we're not going to guarantee any loans. The government's just going to make the loans directly to the students. And so now it's even worse. And of course, now that Obama is dangling, loan forgiveness and forbearance, right? This is adding fuel to the fire because now the colleges could basically say, hey, don't worry about how much money you borrow because you're not going to have to pay it back anyway. And in fact, the more you borrow, the less you have to repay. And especially if you take a low-paying job, because the lower the pay you earn, the less of your loan that you have to pay back. So students are incentivized. If you have a huge debt, like if you graduate with $200,000 of debt, the best job you can take is like a real low-paying, job in a, civil service in like a daycare center or something. Get a job for $20,000 or $30,000 a year because then they're going to forgive your loan. You'll have to pay nothing. If you take a good job that pays $50,000 or $60,000 a year, by the time you pay your income taxes and your college loan, you'll have nothing left. So we're incentivizing our college grads to do menial work that you could have done without a high school diploma. The whole thing is absurd, and only government could create this. And of course, taxpayers are going to be left holding the bag because you're going to ultimately end up with $2 trillion, $3 trillion of student debt. And you know what? Almost all of it is going to be defaulted on or forgiven.
The three sectors of the economy where the government promised that it would make things affordable were college, housing, and healthcare.
Yep.
And they're all the three worst. And of course, for them, affordable means we make the prices go way up, but we'll make low interest loans available to you so you can be a debt slave to pay the high prices. That makes it affordable.
Yes.
Well, the last thing is, give me the quick version of what would be not the seasoned investor, but the average Joe's path through these perilous and difficult and murky economic times. Is there one?
Yeah, well, first I want to just mention one little statistic on housing when you talk about that. So basically, I think in 1950, before the government was that involved in housing, and they came into it in the Great Depression. But back then, the median home that was being constructed was about twice the median income of the Americans who were living at the time, right? So you had to work for 2 years to buy a house. And generally, that was one person working. If you were married, your wife didn't have a job. So a guy worked for 2 years and he could afford a house. Today, the median new home is about 10 times the median income. So you have to work 5 times as hard to afford a medium house today as before the government tried to make housing more affordable. I mean, that shows you. And of course, healthcare too. I mean, healthcare used to be inexpensive. People weren't worried about it. Insurance was cheap. The government ruined that industry too. And now people want the government to get more involved in the economy. It's been a disaster. Thankfully, the government hasn't taken over electronics. What if they took over the cell phone industry or the television or any of that stuff? The only things that are working for us are the things where the government has stayed out. Any place the government has got involved, it's destroyed it. But as far as what we can do on investments, look, the key is to think clearly and understand what the crowd is missing. Look, everybody is so convinced that things are great, that the Federal Reserve's monetary policy has healed the patient. They don't realize that the patient is sicker than ever. It's the same people who were clueless about the upcoming financial crisis. Remember, in 2006 and 2007, people described our economy as Goldilocks. It was perfect. Even many of the Republicans were talking about how great it was. I got into a lot of arguments with guys like Art Laffer, and I was saying, hey, you guys are doing us a disservice. I mean, Bush is president. You're talking about how great this economy is. It's a disaster. We're going to look foolish when this whole thing falls apart if you guys keep, cheerleading that everything is great. So the same people that thought they were so smart and thought everything was great. Remember, we were on the verge of the worst financial crisis, economic crisis since the Great Depression, and it might have been worse than the Great Depression had we not had the bailouts and the stimulus. But those bailouts and stimulus didn't solve the problem. They just enabled us to kick the can down the road. Well, we've caught up to the can and we're running out of road, and now the problems are bigger than ever. So the real crisis that's coming is going to be even worse than the 2008 financial crisis. And the same people who are completely blindsided by that crisis are oblivious to this one. And they're still saying, oh, nobody could have predicted that crisis. Nobody could have seen that coming. And if you bring up my name, they're just going to say, well, he doesn't count because he's just always bearish. He's just a stop clock. Well, I wasn't a stop clock. They're the stop clocks. I understand what's going on. And so I think I can help people to position themselves for the end game. But you have to be willing to understand that when you're right and everybody else is wrong, when you're contrarian and you're going against the crowd, you're not going to look right initially, right? Because they've got the numbers. More people have no idea what's going on than do. And so they're the ones they're moving the big money. They're bidding up the bubble stocks. They're bidding up the dollar, right? Because they don't understand what they're doing is wrong. They have no idea that they're going to lose all their paper profits, that there's another financial crisis around the corner that they're still oblivious to. But we're ready for this one. And this one is not going to be like 2008, where everybody rushed into the dollar, because when the 2008 financial crisis hit, the dollar was at an all-time record low. It had been falling for 7 years. Gold was at an all-time record high. So it was a very different environment. Now we've had gold falling for 4 years. We have gold stocks, the cheapest they've ever been in history. We have a dollar bubble. So nobody is prepared for what's about to happen other than a few people like me, like my clients. So, if you do want to get some of our help, you can talk to our brokers at Europe Pacific Capital at europac.com, or you can get yourself some physical gold and silver with my guys at schiffgold.com.
Well, this is episode 482, so the show notes page will be tomwoods.com/482, and I'll be linking to your books. I'll link to Europe Pacific Capital. We'll link to Schiff Gold, link to your social media. This will be the Peter Schiff smorgasbord, tomwoods.com/482. Peter, thanks so much for being so generous with your time. We always appreciate the opportunity to pick your brain.
Sure, that's a lot of shows, too. You're coming up on number 500. I guess that'll have to be a big one.
Yeah, five. I am trying to cook up something. It can't be obvious like Ron Paul. Everybody knows that, right? So I got to think of something clever. But yeah, thanks a lot.
Maybe you can get Donald Trump or Bernie Sanders.
Yeah, well, look, you never know, right? I'm still like the Jeffersons to your All in the Family. I'm a spinoff of the Peter Schiff Show, and I'm still spinning out here. So thanks to you for getting me started.
Hey, you're doing a good job carrying the torch, because I'm glad if my show's no longer on the air, yours is. And of course, I still do my podcast. Yeah, don't forget.
I'll link to the podcast too. That's right.
Yeah, the Peter Schiff Show still lives, just in a different form, not 2 hours a day every day. But, I do these podcasts on Schiff Radio, and, some of them, a lot of people listen to them. So they're still getting some traction.
All right. So we'll link there, too. Peter, thanks so much.
All right. Take care.
All right, everybody. As we wrap up today, a couple things I want to remind you. Check out that white paper on the student loan fiasco, because it's worse than you think. Check it out at tomwoods.com/student. It's a free white paper. Might as well read it. And, of course, you listen to Peter talk about something and you say, whatever it is, it sounds fascinating. So check this out. Then, secondly, we're talking about college here and, people racking up all this debt and they're majoring in stuff that's not going to get them employed. And I just keep mentioning on episode after episode all the ways that the private sector is coming up with solutions to this. And I've mentioned to you, for example, Hack Reactor. Now, this is, I grant you, this is for techies. But it doesn't matter. It's an example of what I'm talking about. Hack Reactor out on the West Coast, I'm pretty sure it's hackreactor.com, is an example of a program that goes for maybe 3 or 4 months, extremely intensive, where you learn programming. And this is not a joke. I mean, you've got something like 95% of their graduates find employment in this field, and their average starting salary is $105,000. Now, I don't know how much it costs to go to Hack Reactor. I haven't researched it that much. But there's no way it's going to cost you it's same that you'd pay for 4 years of college. Ain't no way. You save a bundle, and you get it done much faster. Why not give that a try? Or, again, I talk a lot about Code School on the show. Check them out at tomwoods.com/code. You can learn coding. You can learn web technologies. And they do it like you're playing a game, so you don't even feel like you're sitting in a classroom. They make it enjoyable so you almost don't notice how much you're learning. You can take what you're learning at Code School and you can sell it. You can sell your skills through freelancing sites like Upwork.com or Fiverr.com. Build up a portfolio for yourself right off the bat just with the skills you learned through Code School. So you can get a free account at Code School through tomwoods.com/code. I've gotten tremendous feedback. I've got a whole bunch of people from the show who have signed up for it. Everybody loves it. So these are the kinds of things that occur spontaneously to solve problems that are created by government intervention. Now, on another matter, I am finishing up my free ebook called Bernie Sanders is Wrong. That's coming out in a matter of maybe 2 weeks at the absolute most. This is early September 2015. It's coming out in about 2 weeks, and it's going to cover all the key topics that he raises, and you're not going to feel intimidated anymore by his supporters. If you were, I would be deeply disappointed to learn that a listener of the Tom Woods Show felt that way, but from time to time we get tongue-tied or we don't know exactly what the answer to a particular claim is. So this fun-to-read ebook will help you out. I've already got the cover designed. I've got a landing page set up. I mean, I purchased the domain name BernieIsWrong.com. I mean, that's awesome. That's going to be good. So anyway, I will let you know when that thing is live and ready to go. But how did nobody else buy BernieIsWrong.com? Wake up, people. That's the perfect thing. The second free ebook, this is the third free ebook I've given away this year. The second one was how to start that blog or website. And I bet some of you folks are driving your friends and family crazy because all you do is talk about this stuff, and they're probably, frankly, tired of hearing it. They don't really know how to tell you. So you have another way of going about this. You can start your own blog and share what you have to say with the world, and I show you exactly how to do it in my free ebook on that subject. I take you through step-by-step how to do it. I show you how to get your blog up running in 5 minutes. I'll give you some free publicity for your blog if you haven't started it yet. You head over to tomwoods.com/publicity, and you'll find out what you need to do to get free publicity from me so that, more than just your own mother will be reading your blog. So do please check that out. That's it for today, everybody. Thanks for listening. See you tomorrow.
Become a smarter libertarian in just 30 minutes a day. Visit tomwoods.com to subscribe to the show for free, and we'll see you next time.